is Manish Shah from Definedge Solutions. Today, I am going to share story of Mr. Nakul Bajaj. Nakul and I met in a Renko conference in Ahmedabad in 2019. At that time, he was working with Tata Capital and drawing 6-digit salary per month. He came there to meet Prashant and the fellow traders like Vittal, Ritesh, Vikas and many others. After the event, we kept in touch and discussed trades. In some days, he decided to join full-time Traders Nest Ahmedabad, where I got an opportunity to look at his trades very closely and his balance sheets very closely. I was so impressed with his disciplined approach and processes. We at Definedge persuaded him to share his journey from a service worker to a professional trader. Here is Nakul.
Hi everyone, my name is Nakul Bajaj, and in this video I will be taking you through my trading journey, the process which I follow and the tools which I use. Firstly, I would just like to thank Mr. Prashant Shah and the whole team at Definedge Solutions, Mr. Manish Shah, Mr. Vittal Shinde, who have played a big part in my journey to becoming a professional trader. To take this step from working in a job to trading as a profession was not an easy one. Like a lot of people, the thing is, you have a lot of resistance from your family, from your friends, from the people you know. But trust me, that for me was not the hard part. The hard part was actually to be ready for you yourself to take this step. Trading, as you all know, is about the mentality which you have, and the emotions, how you control them. The thing is, more than anything else. Trading is actually very easy to get attracted to. It goes from a feeling of excitement to greed to frustration to desperation to addiction, and finally you see, the thing is, reach the stage of realization. What has this stage of realization brought to me? The stage of realization brought to me is the fact that you can only take this step into being a professional career when you are ready. And how do you come to know when you're ready? How do you come to know that this is the right time to do it? Well, there are various ways to identify that you've reached that stage or you've reached that part. So, for me, it has always been the fact that, when I actually, the thing is, started into derivatives trading. Like a lot of people, I was not following process. I was not following money management. This is something which even though if you know, it's the thing is still very hard to follow. That's where, people like Prashant, people like Manish, people like Vittal, these guys, they help in terms of, guiding you in terms of, where you're going wrong, what you need to do right, what you need to control. So, in terms of my journey from 2016 onwards, when I started trading in the derivative markets, I actually started off in terms of basic, candlestick patterns. For around 8 to 10 months, I actually went into market profile, but that was something which was over my head, and frankly, I realized I can't sustain in terms of doing this. In 2016, 2017, I basically got introduced to point and figure charts. I was following Mr. Vijay Thakkar on Twitter, and he had posted charts of point and figure. That got my interest into it. I then went out and bought the book by the book written by Mr. Prashant Shah, Trading Markets, the Point and Figure Way. Once I started reading it, it basically just immediately clicked with me that this is something which is easy for me in terms of learning and in terms of application. But again, I was a bit wrong over there, is in the fact that, even though it looked easy, nothing is easy, until and unless you get to the depth of those things. Once I finished reading the book, I actually attended, the 2-day workshop, conducted by Definedge Solutions in Pune. And I would just basically say that, that was, the turning point in terms of my trading career. That's when I actually started to realize how important it was to do money management, and also not depend on other people's analysis or what other people are doing in terms of trades, to do your own trades. Uh, I would just basically say that it, opened up a world of opportunities for me. However, I was still even not, ready at that point of time. Uh, in that workshop, I actually, at that point of time, one day was conducted by Mr. Raju Ranjan. He had said in that workshop that he looks at over 300-400 charts on a daily basis, and he talked about the fact that how important it is to train your eyes. To the thing is, to the charts which you're looking at. From that point onwards, I started looking at all stocks which are there. The thing is, in the FNO space. So basically, they range from around 140 to 150. Right now, the thing close to 150 stocks which are there. So what I started to do was look at all the 150 stocks in the FNO space on a daily basis. This basically helped me in terms of, the thing is, eyes being trained in terms of chart patterns, in terms of price action. Now, what I do currently is basically in terms of my process which I follow. I use the software by Definedge solution, which is TradePoint. For this video, I will be using the web version to show it to everyone. The thing is, web version is a free software and everybody can use it. So what I do in terms of my process is basically, the thing is, I look at candlestick charts on a daily basis, and I look at point and figure charts on an intraday basis on a 0.25% box size. Now, my screen which is over here, this is the web version of TradePoint. Now, to open a point and figure chart, you just have to go over here. Sorry. You open a point and figure chart, you put any stock. I'll start with ACC, 0.25% box size, and you change it into a 1 minute time frame. Alongside this, I will open a candlestick chart. Now I have the candlestick chart which I'm going to be taking on a daily basis for ACC for the current month contract, and I have the point and figure chart over here which is on 0.25% box size on a 1 minute basis. Now when I start looking at the list of FNO stocks over a period of time, I have basically qualified into around 70-80 stocks which I look at on a daily basis. For example's sake, let's just have a look at TCS. So when we are looking at TCS, I will open it up on the candle chart, I will open it up in the point and figure chart. The settings remain the same, you just have to change the name from the search bar. Now, why I use candlestick charts is because I basically plot Fibonacci retracements to find important levels of support and resistance where I can expect a certain amount of price action to come in. So what I'll do is I will plot the retracement. I will take all the retracement levels which are there. Now if I'm looking at what TCS is doing today, now in TCS it has retraced back above the 61.8% retracement level, and it is trading comfortably above that. It has come and tested it. It has also tested the 50% retracement and taken support. So I know that this is something which is bullish. Now I will then come to the point and figure chart. Now point and figure chart, basically my job is to find a tradable pattern. Now what do we call a tradable pattern? A tradable pattern is one in which you get a good risk reward trade and you have momentum in that stock. So suppose I have analyzed this stock in terms of the fact that I have to take a long trade in this thing. Now I have to then look for a pattern in the point and figure charts where I will see an entry level, I will see a potential stop loss level, and I can calculate the target level using the tools of VC counts which is provided by Definedge Solutions. I will just take you through my Excel sheet which I use for my daily analysis. Now this was basically done by me yesterday for my trades today. So what I'll do is I will note down the name of the stock, the position which I'm most likely to take, the lot size, because with the lot size I can calculate my risk and my risk reward, the entry price at which I'm going to be entering, the target, the stop loss level. With the stop loss level, I can get to know my risk per lot in this trade. I can get to know the risk reward at the target point. Now RS rank and performance score, these are tools which I got introduced over the last 1 year, and how important they are in terms of analyzing and finding the right trades. Even though we might have price action which is working out perfectly, but there are things which are under the floor which are not visible. So this just helps me identify those things. So what basically is this RS rank and performance score? Now if you go back to the website, there is a tool called research over here. In research, we've got something called as matrix, RS matrix. Now basically what an RS matrix does is, we have a list of stocks, right, which is in my FNO space. We have the index. Now what this matrix will do is, it's going to divide that stock by Nifty 50. So what I'm going to get is a relative score of that stock to the underlying, which in this case is the Nifty 50. So I'm going to choose FNO stocks and I'm going to choose Nifty 50, and I press scan. It's as simple as this. It's just going to take less than 25-30 seconds, and you're going to get data for all the 150 stocks in the FNO space. Now the first thing which I do once this is completed, now there's something called as a ranking score. Higher the ranking score, the more bullish the stock as compared to Nifty. So I'm gonna just the thing is assort this in terms of highest to lowest. So what I get is the stock which is which has the highest ranking score. So in this case, top 5, we have Jindal Steel, we got Tata Power, Idea, Glenmark, and NIT Tech. Performance score. Now this is something which I had noted down over there. What does the performance score denote? So what it does is, in different box sizes, which is 0.25%, 1%, 2%, and 3%. Now these can basically be understood as different time frames also, but the correct way to look at it is in terms of the percentage box size. With a score of 2, it means that on a 0.25% chart, when we divide Jindal Steel by Nifty 50, it is in a double top buy pattern. If we have a score of 1, means that we have a current column of X, but it is not a double top buy. If we have 0, it means it's not a double top buy, not a double top, not a double bottom sell. With a score of -1 means that the current column is of X, but it is not a double bottom sell, and of a -2 we have a double bottom sell. How do these charts or this analysis help? Let's go back to the charts. Let's just open an RS chart. Jindal Steel we saw as the most bullish stock. Over here I am just dividing Jindal Steel by Nifty 50. RS is the thing, 0.25% box size. So what I have over here is the chart of Jindal Steel divided by Nifty. What I can clearly see is that Jindal Steel is outperforming the Nifty 50. What this basically helps in doing is that if I've identified a long trade and it is outperforming the index, it just helps in being in the right stock at the right time. So basically this is what RS is. So I will note down in terms of my analysis the RS rank and the performance score. Now I'll just let you know how basically this helps in terms of my analysis. Now the thing is, we have a look at Titan and have a look at Maruti. Both of them were qualifying for long trades as per my own analysis, right? Now if you see, the first thing which I see is that the risk reward. The risk reward for Titan was 1.3, the risk reward for Maruti was 2.3. So obviously you're going to prefer Maruti over Titan if any of these two trades get activated. The RS rank of Titan was 80 on 150 and Maruti was 41 on 150. Now basically what this tells me is that out of the whole universe of 150 stocks, Titan in terms of its performance over Nifty is somewhere in the middle. and I mean Maruti is towards the top quartile. So I will basically, what I'll do is I will eliminate Titan from this list, because for my long trade I have a trade which has a better risk reward, which has a better rank, and the performance score of 4, which is positive, which is also a good territory in terms of taking a long. I will then go back, I'll just go back again to my charts. So once I have a qualified stock, I do the risk reward, I basically know what I have to do in terms of the trades which I'm going to be taking the next day, and also what not to do. Now I would just like to take you through some old trades of mine. One trade which went well, one trade which actually went bad. So I have the charts which are saved from those days. I've got ITC trade which I had taken on 21st May. Now ITC before that day, so the thing is, this chart is of the previous day before the market opened. So this was the chart of ITC, which the date I guess was 21st May. Now first thing which I was looking at over here was the fact that on the candlestick chart, ITC had taken support at 61.8% retracement. It was a perfect support level. Now if I am over here right now, right, what is my analysis? Basically, the thing is, ITC has broken the 38.2% retracement and is more likely to go towards the 23% retracement or higher than that. Now then I come to the point and figure charts. In point and figure chart, the thing is, the concept of anchor columns is basically something which gives me good risk reward trades, in terms of the fact that those are stocks with momentum which have shown a small retracement, and also these give very good risk reward trades. Now if I look at it over here, the thing is, ITC from close to 157.5 went to around 168, 169. It had a small retracement, but it did not give a double top buy. ITC retraced from that level. We had another anchor column. We had a small, the thing is, retracement, and we start to get the follow through back. Now, how do I basically trade this? Now, I'll just open ITC over here, and we'll just see what happened in ITC. So, this was that level which we were seeing on the chart, right? We again did not get an immediate double top buy. We got another retracement. Then we got a double top buy. Now basically this is also a pattern in point and figure which has been coined by Mr. Prashant Shah. It's called the ABC pattern. Now what this pattern does is, now the thing is, ABC pattern is one of my favorite patterns in terms of trading, because these give very good risk reward trades, and also the fact that my success ratio in ABC patterns is very good. So what does an ABC pattern basically mean is that we have a long anchor column, we have a consolidation after that, and then we have a breakout. Now what are the levels over here which we need to identify, right? When it is breaking this level, you will see over here I've got a DTB which is a double top buy, we've got a DBS which is a double bottom sell. So DTB will tell me what is my entry point, a DBS will tell me what is my stop loss point, and I will plot a vertical count which is going to give me my target. Now over here we can see the DTB is 176.5, right? The DBS is 172.4 and the target is 188. Now basically what I'll do is I will just plot this in my Excel sheet. I will put ITC over here. My long position, ITC, I think the lot size is 2400. My entry level was 177. I'll just take a round number. The target was 188. The stop loss was 173. So the risk in this trade was 9,600 rupees. The risk reward for this trade was 2.8. RS rank, I believe at that point of time was around 13 or 14, so it was again in the top quartile in terms of its signing performance. Uh, Also, what I do on a daily basis is something which I'd like to take you through. Once I have my whole analysis for the day, uh, you can't look at 10 to 15 stocks. I just feel that, for you to be efficient in terms of what you're targeting, what you, need to target in terms of, trades which are gonna, perform most likely, you need to cut down to at least 4 to 5 stocks. So what is my filtration process? My first filtration process is, if the risk is more than 10,000 rupees per lot, I am not going to be taking that trade. The second thing is risk reward. If anything comes below a risk reward of 1.5, it is not a trade again which I would like to take. The third is the RS rank. If I'm looking for a long trade, the thing is I basically want an RS rank which is in the top 30, top 40. If I'm taking a short trade, an RS rank of, the thing is, below 100 or more than 100 in this case. The next step which I follow on on a daily basis is looking at the overall market structure. Now you can look at charts also for this, which even I do, but you have to dig a little deeper in terms of, what not to do. Now, over here I have mentioned something as X breadth analysis and DT% breadth analysis. I've written Nifty 50, FNO stocks and the bank index. Basically what this does is that in Nifty 50, how many stocks have a current column of X? In FNO stocks, how many stocks have a current column of X? And in the bank index, X. DT% means in Nifty 50, how many stocks have a double top in the current scenario, in FNO stocks and in bank index. Now what you get to know from this is that, if the market is an extreme oversold. Now if you look at it over here, bank index, the double top percentage was 0 and the X percentage was 25. Now both of these had been in this range for the last 3-4 days. So one thing became very clear is that the market, specifically the bank index, is extremely oversold. So I will be wary of fresh shorting at these levels. What you basically want is that, if you have a view which is bearish in the markets, if you're expecting the markets to fall, let the markets cool off a bit, let these numbers go up, become, close to 75-80 levels, then look for follow through sell patterns in these. Now how do I look at this? How do I find this? Now basically you just go again to research over here, you go to matrix, you go to breadth, right? I've got PNF X%, I choose the group Nifty 50 and I just click scan. Less than 5 seconds, right? So this is actually data for today. It's been updated. It's 88%. What was it yesterday? It was 68%. Now let's look at bank index, because that's where the major change has come today. Bank index today, the X% is 100%. Such was the ferocity of the whole move. So at these levels, I know that I am not looking for fresh shorts. What I was telling you is that you need to look for a rise, look for them to cool off, and then look for sell patterns if you have a bearish view of the market. Or if you have a bullish view of the markets, you need to let this cool down, come to these levels, and then look for buy patterns. This basically is not telling you what to do in the market. This is basically telling you what not to do in the market, and I feel that is more important than knowing what to do. As my last part, I would just like you to think is I wanted to show a trade which did not work out last week. I think Marico. So this was 15th May, the trade of Marico. Now this was the chart which I was looking at, or the thing is a day before, which was on 14th of May. Now Marico over here, what I was saying was that again, FMCG was one of the bullish sectors. It was comfortably trading above the 61.8% retracement. It had tested the 38.2% retracement, and it has again broken that swing high, right, with a very bullish, daily close. On the 1 minute chart of Marico, I saw that we have again an ABC pattern, right, a bullish anchor column and a breakout of that. So basically in this thing for me, what I had noted down that day was that my entry level was 318. The current price was 319.2, but I was looking for a little retracement of 318. The stop loss was 313. The target was 327. Now I'll just go to the chart and we'll just see this there. Marico. By the way, right now also there's an ABC pattern in Marico. And the next double top buy is a potential trade over here. So yeah, let's go back to 15. So what I was seeing over here was that there was a triple top buy in Marico, a very strong pattern in point and figure, which has one of the best success ratios. It was upward trending, so you look at entry patterns. Now I had missed this entry, right? Then I saw this coming, which was an ABC pattern, right? Basically what I was looking at was a buy at these levels when it broke these levels. Now there was a big anchor column which happened in the morning. So over here my entry was this double top buy. Now this failed. It went up. It did not hit the target. The target, if I have to plot over here, first target was achieved. 327 was my target, which you can see over here. It went up to around 320, 321. It gave a follow through double bottom sell, and that was my exit. So basically I exited at around 4 points loss in this thing. My risk in this was around 6,000 rupees. My reward in this thing, which was a potential reward, was 11,700. So basically what I was looking at was a risk reward of around 1.8 to 1.9. Marico, even though this trade failed, right, the pattern still held. So for me this was still a potential trade, right? But when this low got broken, the pattern failed. But again we had O's at that, I think is same levels, and then we had follow through trades. Now if I'm looking for a potential trade in Marico, I will look at this, right? I will see where the retracement is in terms of the candlestick. So I'll plot the Fibonacci retracement. I will take all the Fibonacci levels. Right. So what I can see in terms of Marico is that it is right at the 78.6% retracement, and it is facing a little resistance over there, right? So what is this level? 322. Now I'll go to the point and figure chart. When is my next double top buy? 323.85. Now let's just plot this in the Excel file, right? Just for tomorrow. Marico long. Lot size is, I guess, 1300 in this. Entry price, right? Entry price, the next double top buy, which is 323.85, so we'll take it as 324. The target, we have an open count. No, we don't have this open count. Let's see the open counts which are there. 338. So target 338. Stop loss is the immediate next double bottom sell, which is 316.65. So we'll take it as 316.5. So I've got my risk in this trade of 9750, a risk reward of 1.9. Now let us look at the RS rank. Let's just go back to research. Let's go to matrix, RS matrix, FNO stocks, scan. Sorry, Nifty 50 as a denominator, and we scan. Now while this is happening, right, I would just like to talk about the fact that for me what became enjoyable was the whole process of analyzing, the whole process of finding the next potential performers. You have to enjoy looking at charts. You have to, uh, not get bored when you, the thing is, repeatedly keep looking at the same charts on a daily basis. I think that's very, very important. So I just downloaded this. I guess this is updated for today. So we'll just open this. And what we'll do is, we'll first just put rank over here, right? We will just do a filter and we'll sort them from largest to smallest. Now we'll just put rank, and I've got my rank from 100 to 150. Now where is Marico? Marico, the rank is 14, the performance score is 4. So it becomes very, very clear that this is a potential trade for tomorrow. A performance score of 4. Now where is this performance score? On 0.25%, Marico, I'll just highlight this. Marico on 0.25% has a score of -2. But in 1%, in 2%, and in 3%, it has a score of 2. So it is bullish in the larger time frames. In the smaller time frame, on a daily chart, let's just go to the daily chart of Marico, and that will just actually basically end the whole analysis part. So what we'll do is we'll go to the, so on a daily chart also today we've got a double top buy over here. So Marico is bullish on all time frames. It is a potential trade which is there for tomorrow. So basically this is my analysis for tomorrow. So the thing is, I will basically go through my list of around 80 stocks and find out my potential 10, 12, and then I'll just filter down in terms of the best in terms of risk reward, the least risk, and in terms of the RS performance over Nifty. Before I basically end this, I would just like to talk about the fact that my advice to people who are looking to get into trading professionally and looking to earn a stable income through trading and want to make a career in it. Now, what I will basically say is that you first have to be ready. Ready in terms of the fact that you need to be an analyst on your own. You don't need to depend on anyone else for finding out your potential trades. You need to do your own analysis. You need to filter down on your stocks. Now the thing is, this process can be followed on a positional basis also. I basically do intraday, so I look at it from an intraday point of view. You can do it on a positional basis also, so it works from both sides, right? The thing is, the same kind of analysis which I do. So to be ready is also the fact that obviously you have to look at the thing is, your financial situation. You have to look at the situation at home. But is this something which you can do? I feel that anybody can do this if they have the right mindset. Your mindset has to be trained over a period of time. You have to be committed in terms of putting the hours on a daily basis. If you can give 4 to 5 hours on a daily basis for analysis, you will end up becoming one of the best analysts. Think about it for yourself. Stable income, the thing is, what I used to do was that I had a daily target in mind, and at that target, what I'll basically do is I will basically stop trading. At the thing is, when I reach the target, what I've changed over a period of time, that even if I've reached my target and my next potential trade is not eating into more than 30 to 40% of the profits which I made, I will take that trade. This has basically helped me in the sense that suppose I'll take for example that my daily target is 10,000 rupees of profit, and suppose I've already made 10,000 rupees today, right? The next trade which I'm getting has a potential risk of 4,000 but a reward of around 8 to 9,000. If I end up taking that trade and that trade goes in my favor, right, I end up making around 17, 18,000. So basically what I'm doing is that with my risk reward, I'm just making sure that a good day is not ending negative and the potential to become a better day. Now, if I think about my success ratio, which has been around 60-62%, what this basically does is that, even the days in which I have not made a profit or I've made a loss, with how I structure in terms of taking my trades, in terms of after I've reached my profit target, most of the times I actually end up recovering my lost days in my extra profit day. But that is something which comes with time, which comes with a little experience. We are all learners in the market. I on a daily basis, learn a lot from a lot of people in Definedge and a lot of people who I work with also. Uh, I would just like to say that the thing is, I mean, last year I had attended 1 week at the Nest program, and at Nest basically what happens is that you have a group of traders who go at the Definedge office, right? You have a separate room over there. Uh, you have chat. The thing is, I mean, charts on large screens. The thing is, I mean, obviously get your own laptop to do your own trades. It becomes a community where you're looking at charts together, you're analyzing together. We have in a day, close to, 3-4 times when we'll have, the thing is, Mr. Prashant Shah come in, he'll give his views, he'll give his analysis, he'll also test people in terms of, what do you feel? We've got, the thing is, AP sir who comes around 6 to 7 times in a day. He will also do the same. He will look at his option charts also. He will ask us, what do you see in terms of range of the Nifty? Uh, they are not there to give you trades. They are there to help you become better analysts and in turn become better traders. I currently go to the Nest which is there in Ahmedabad, and it is, the thing is, basically started by Mr. Manish Shah and Mr. Vijay Shinde. A word over here about Mr. Manish Shah. He is someone who motivates you to an extent where you're charged up before the day, and you are ready to do the right thing. His focus is always on one thing, which is discipline. If you have discipline in terms of practicing your trades and your patterns, there is nothing which can stop you. Mr. Vittal Shinde, I actually got a pleasure with the thing is of spending 1 day with him in Nest. He had come on an expiry day, and it was a very, very fiery expiry day. The day he had come, I still remember, there was a trade which we were all looking at, and there was this call option which was giving a follow through buy. I remember the call option, the price was around 74-75 rupees. The entry was around 82-83 rupees, and the thing is, Vittal Bhai had at that point of time, pointed that out that, there's an anchor column which has been made over here. Look at this trade, find your pattern, and see what you will do in this thing. I ended up taking that trade. I actually entered that trade at around 87. I exited that trade at around 120. And that trade actually went up to close to 770, 800 rupees. Very, very similar to what happened today, right? What that taught me was that I actually was in the wrong position size. So if you are someone who is, the thing is, basically getting into trading, it is very easy for you to take big lot trades, right? It gives you big potential profits, but your lost trades are basically just going to erode your capital. So, the thing is, control your, trading emotion, do with limited, lot size trading, learn first, and then over a period of time, you become a better trader yourself. You don't need to ask anyone. I would actually like to thank, Definedge and the whole team, because they have basically changed the whole way I trade, and, how I look at in terms of this. I basically would have given up if I hadn't come across Definedge solutions. Be dedicated to your process, be dedicated to what you do, be motivated. It is a risk worth taking, is what I would say. It is a risk worth taking, but you need to know what your risk is. Thank you very much, and I hope what I talked about helped you all. So, thank you.